excited for today's call because I don't want to like set it up, but it's going to be one of the all-time, maybe best calls ever. Of course, Dave Savage just jumped in for a few minutes. Welcome, Mr. Savage, CEO of Mortgage Coach.
What's going on, guys? I'll let you rock it out, Todd, and lead the way, but I'm going to look forward to hearing the recording. I'm going to be speaking to a group of credit unions today, and thanks for taking care of it. And then Josh Mettle and Michelle, thank you so much during this busy time for coming in to bring value to the community. I really appreciate it.
Honored to be here, brother.
All right, well, so let's real quick. I'm going to introduce Michelle because Michelle's going to be our second half guest, but I've known Michelle now for, I don't know, maybe a couple years. Michelle's a big Win by Noon user. She's a Win by Noon certified instructor, and she is from Mississippi, and she's full of fire. Welcome, Michelle.
Thank you, Todd.
Yeah, I've been hoping to have Michelle on for a long time, and so this is going to be a lot of fun to have her on here, but Josh has 30 minutes this morning on his calendar in the busiest time probably of his career. So we're going to jump in and start with Josh, who told me via text, watch out, I'm on fire. Welcome, Josh.
No pressure, brother. Yeah, good morning. Thanks for having me.
I'm super excited. I always love when you're willing to jump in and share with the community. And I know that you've got a lot on your mind, so I don't want to steer you off track. But, you know, we just know that refis are crazy, and here you are able to take some time out. It tells me that you're doing something right. But what's going on in the world of Josh Mettle and your team there in Utah?
Yeah, well, first of all, I'm always honored to be here with the community. And I'd be remiss if I didn't just say thanks to the community, because I get so many emails and messages, and a lot of folks know that we're licensed in all 50 states. So we get referrals from the Mortgage Coach community. And you know, between you and Dave and the whole community, it's a really important part of my life and a group that I'm proud of. So thanks to the community, honored to be here. Yeah, so you know, as we're going into this refi wave, the first thing that comes to my mind is that it's not about me. It's not about us as loan originators. If you're going into this environment thinking about units, thinking about volume, thinking about your bank account, and thinking about ego, I think your head's really in the wrong place. And I've been doing a lot of talking with clients around the fact that, you know, reducing your interest rate from 4.25 to 3.5 is not really where the sauce is at. That's really not what's going to get you a home or ahead financially. So the first thing I would bring up is we need to pause. We need to slow down. There's $11 trillion in mortgage debt out there. This is an incredible opportunity to help people. But if we go in guns a-blazing, one application after another, let's just talk about rate, we're really undermining ourselves and the potential impact that we have to be advisors. And I'm aware of, after every feast, there is a famine, right? So at some point, these rates bottom out. And unless we go to negative interest rates like, you know, going on in Europe, we're probably going to see higher interest rates ahead. And that means we're going to be in a very purchase market business. So the clients that we have an opportunity to impact in 2020 will remember us by how we serve them and how we treat them. If they're a number and the only advice we give them is 3.49%, take it or leave it, sucker, I got another one waiting. And that's the feel, like they can just smell that we kind of think of them as money. That is how they will think of us when they turn to do their next purchase a few years down the road. So these are the three things that I am really trying to focus on when I talk to clients. It's not a conversation about rate. Of course, it always starts about rate because they say, hey, I think my rate's high. Can you get me a lower rate? And it's up to us to shift that perspective as an advisor and say, hey, this is an incredible opportunity. But the only opportunity is not just in lowering your rate. So let me ask you a couple questions. Let's talk more about strategy, because the right mortgage strategy trumps the best interest rate 10 out of 10 times. It always trumps the best interest rate. And I'll give you a couple examples. The first thing that we're doing with clients is we're asking them, yes, let me do a mortgage analysis for you. Send me your mortgage statement if it's not somebody that we did their loan and have all their data. And then answer these questions for me. What other debts do you have? Let's do a global debt analysis before we go head first into me prescribing you a mortgage strategy. Let me understand what's going on with your student loans. Let me know what's going on with your car loans. Let me know what's going on with those loans that you co-signed for your kids. and tell me what those payments are. So just real quickly, Chevy, $23,700 a month. Boom, let's get those listed out. And then let's start talking about the conversation of what can we do. You know, we're at an incredible time in the mortgage world because not only are interest rates at an all-time low, but homeowner equity is at an all-time low, high. There's never been so much tappable equity in American homes ever in the history of the country. And at the same time, consumer debt is at an all-time high. People have an unbelievable amount of their monthly cash flow going to service that consumer debt. The better strategy is, instead of taking a 3.49 rate, take a 3.75 rate. Let's pay off the motorhome, the student loans, the credit cards. Let's save you $1,700 a month from all that crap you're paying. And then let's refocus that money towards your new mortgage. Your 23-year mortgage is now a 13-year mortgage because we went to a lower rate, we consolidated all that debt, and now we aimed that money that was going to the consumer debt towards your new mortgage. So that's conversation number one. We need to do a global debt analysis before we talk about, you know, any kind of interest rates on a new 30-year fix or what have you. If clients don't have debt, then the conversation we're having with them is, look, if you understand an amortization table, then you know all the interest is in the first 10 years. I mean, the vast majority of that interest is loaded in the first 10 years. Well, guess how old the average mortgage in America is right now? 7 years old. So that means that the majority of people that we're looking at refinancing are just getting to the point where they're starting to pay principal. And if we drop them from 4.25 to 3.49 and save them a couple $100 a month, which they go blow because we didn't give them any advice, and then they go to sell their house in 3 or 4 years, guess what? We screwed them. Because they're actually going to pay more interest at 3.49 on month one of an amortization schedule than they are at 4.25 at year 8 on an amortization schedule. So we need to let them know that they're actually, if they're going to sell their home in a few years, they should maybe just stay in the same loan because they're just starting to get into the amortization table. Or we educate them of that fact and say, look, I'm going to refi you down to 3.49, but you better keep making that same payment. You better stay on track because when you go to sell this house in the next 5 years, you're going to have a crap ton less equity if you start your amortization chart over and then make the minimum payment and go blow that money. So be super intentional what you do with that savings. And let me show you with the total cost analysis. If you refinance, let me chart your current mortgage trajectory. Let's see how much equity you have in 5 years. Let me chart a 3.49 rate with a lower monthly payment, but now you start the amortization table over. And then let me chart that 3.49 rate, but you keep making the same monthly payment, right? That is the game changer. And then the last thing is, of course, I'm trying to get people from, you know, if you look what Quicken's doing, I don't know about you, but I get nailed by Quicken with marketing all the time. They're selling 15-year mortgage, 15-year mortgage, 15-year mortgage, 15-year mortgage. And that's the strategy we should really be helping people with. The ninja move isn't, hey, let me save you $200 a month. The ninja move is, let me help you get closer to retirement by 5 years by moving you to a 15-year loan, right? So it's the value and advice that we give clients now by slowing down, asking a few questions. We're great at asking questions on purchase applications, right? Tell me about your dog. Tell me about your kid. Tell me about your lifestyle. Tell me about this. On refinance questions, what question do we ask? What's your rate? Right? We need to get back into asking questions on what's going to happen to our clients, and we need to get into the advice mode because in a few years, these refinance clients are buyer clients, and they're going to remember how we treat them in this transaction. That's all I got. That's what's on my mind, Todd.
Dude, that is like fire. You are so right on it. And I think that that's the challenge, right? I'm talking to so many LOs out there, and they're saying that even when they're calling their current, you know, their own database, that the people in their database have already talked to 2 or 3 lenders. They're getting hammered by the servicer that bought their loan. They're getting hammered by random phone calls, right? They've probably talked to Quicken, who everyone's first thing is, well, Quicken's more expensive. They may be more expensive, but in the consumer's mind, they're the biggest and the best. So I think that's just really, really valuable. How are your LOs and how are you then shifting the frame of someone who's like, well, nope, I'm already decided on 3.49. I'm already in on it. I've already got my 3 quotes. What's yours?
Hey, real quick before Josh answers that, just because I literally am gonna have to leave after this. So Josh, my takeaways from hearing you talk was, don't just do a loan, provide a loan that's going to help the family achieve their long-term goals. I heard you say that every time you deliver a proposal for a refi, let's not just focus on the monthly payment, let's focus on the savings over time. And I guess I have two questions. One, how often when you do a refi TCA, are you showing like, hey, here's your current loan, here's the cash flow savings, and here's a way to pay off your loan faster by prepaying your mortgage? How often are you using that functionality within the TCA?
Well, what I'm really doing is what Renee Rodriguez taught us in the Amplify event, Dave. I'm claiming the frame. Everybody's saying rate, rate, rate. I'm saying lower total cost and increase your wealth through a smarter mortgage strategy. And then I say these words: strategy always trumps rate. I don't care. You will always win as a consumer with a better mortgage strategy than a lower rate. And they're like, huh? And then I show them to answer your question. And I'll say, here's your current mortgage, right? Here's what it looks like if we take you down to a 3.49 rate and you make the lower payment. Here's how it impacts your equity. You actually have less equity 10 years down the road because you start that amortization chart over. Here's what it looks like if you continue making the same monthly payment you are now, but we put you on that lower interest rate. And here's what it looks like if we go to 3.75, take a higher rate, but we pay off this $20,000 in debts that's tied to the $500 a month in payment. And then we use, not only do you keep making the payment you're making now, but you take that $500 you were making to the debt, we put that to the new mortgage. Bam, that's the ninja move. Now we pay off your loan that you had 23 years to pay off. Now we pay it off in 13 years. Doesn't cost you a dime more. Same number of dollars leaving your account every month.
Boom. So, and ask, would you mind taking an example TCA that you do for the mortgage coach community, call it the Josh Mettle refi TCA, and then putting a video on it that is to the mortgage coach. So think of you as a sales manager for the mortgage coach community. You're like, hey, MC community, this is what I'm doing. And you give like a 3-minute sales leadership with a TCA so that everybody, in the channel has a Josh Mettle refi TCA with a video that has some scripting. Are you cool with that?
Yeah, man, I'm happy to do that. You bet.
Okay. And then one more ask, because I've seen this come in 20 different ways to Sunday, is people are, hey, I've got the lowest rates on social media. They're mass texting their database. And I think all these things work. And there are some great ways to do a reach out. And the thing I like the best is I'm seeing top producers in off hours create missiles, TCA with a video to a client, text, so they could do it in their off hours, TCA video with the text. What are you doing from a proactive standpoint, and what do you recommend? And then I'm gonna let Todd, you take it from here. I just want to hear what Josh is doing there.
Yeah, we're creating a series of, so I just wrote an article, which I sent you a copy of, and it's a 3,000 word article, which is a pretty long article. Most people don't read articles that long. And I broke it into, we're gonna break it up into 5 blogs. Each of those blogs will have a video around it, right, on that concept. And then we're boosting those videos. Those are going to be 60 to 90-second videos. We're boosting that to all of my past clients, all of our LO's past clients, and all their referral partners with the lead in to click, read the blog post, read the full article, contact us for your total cost analysis. So we're using, so we have a monthly email that goes out as well, but we're not peppering people with the email. Although our emails do allude to the opportunity that's around us right now for restructuring their debt, but we're really using Facebook and Instagram and Twitter to our custom audiences to get those messages out.
So I hope everybody heard, the call to action is get a total cost analysis. Because here's the deal, guys.
Sure.
As a financial leader, like and I've talked about it before, as mortgage professionals, we have the ability to be the captain of the wealth team, the most valuable financial advisor to a family. And common sense things like, do you have 3 to 6 months in savings for both an emergency and an opportunity? Are you evaluating all your debt from a total cost perspective over time? Like the industry, everybody who sells money, they show you monthly payments and cash to close. You're an advisor. Look at the cost over time. Usually that means eliminate all consumer debt, and maximize optimize 401ks and retirement, and then look for strategies to pay off your debt faster and build wealth. That's what Josh is doing, guys. So my last, again, I'm going to leave it to you. I just want the mortgage coach community to make sure you heard everything Josh said. This is what a mortgage advisor does. And here's the deal. Not only if you do what he's saying, will you kill it in this market, you will elevate yourself for every market. This is like an opportunity for everyone to, like, if you were a B player in the mortgage industry, you can be an A player right now, and you could be an A player forever if you adopt these habits and these behaviors, because you pick your habits pick your career. And so pick these habits of doing more than quoting rates and selling monthly payments. Pick this as a time to build a new habit. And so Josh, one last thing, did you see that video that Jeremy Forcier did where he's asking his current client base for a referral? Like, when they say thank you, did you see that?
But I'm sure it's brilliant.
Yeah, I'll let Michelle and Todd run with it. But here, bro, I will tell you, it's 2 minutes. Not only is it brilliant, but I'll bet you even you will get an extra 5 loans a month if you adopt a simple, when customers say thank you, active customers in the pipeline say thank you, you basically, ask them for a referral. And in a strategic way, it's a real money strategy. So
the moment of influence when they say thank you, you did a great job. I love it.
Yeah, well, Jeremy has been through, Amplify, and he's amplified his ninja moves. The client says thank you, and he basically says, actually, let me just pull it up real quick because I have it.
That's actually
while you're on the phone.
That Jeremy could amplify his ninja moves, because he already had some pretty badass ninja moves. So these have got to be incredible ninja moves.
Well, listen to this.
Over the top.
So listen to this. The customer says thank you. In the subject line, it says, "We love helping you!" Explanation mark. First sentence is, "Can you help me with something?" Remember, the customer just said thank you for a pre-approval, an approval. "Can you help me with something?" Space. "My goal this year is to work with more people I like." Space. "Can you introduce me to 2 people that you think I should know and I can help in the future?" Boom. That's it.
Love it.
And he said not only is he getting leads, out of all his lead sources, they're the most convertible leads.
Wow.
Current customers in process. So, all right, I have done my part. I am going to let Todd take it over, and it looks like we got 10 more minutes with Josh. So have fun, you guys.
Thanks,
Dave. So thank you so much for jumping in. It's always great. Like, Dave's takeaways are just spot on, and he does such a good job of recapping what Josh just said, and then of course putting the mortgage coach icing on top of the cake. But I think that's really critical. And how much he talked about the ninja night moves of using video on the TCA. How much are you guys doing that, Josh?
Sorry, just say that question one more time.
Dave talked about the ninja night moves, he called it, sending out, after hours, a TCA with a video so that you're saving time, right? You're not having to do the call during the day. You guys are putting videos on everything, right?
Yeah. There's so much, this really comes down to a capacity issue. So, honestly, I don't think our LOs are working until midnight. They are working early in the morning for sure. But a lot of my coaching around this season has been, business isn't going to be a problem. What we need to be thinking about is how this business and how this wave impacts us as a person. Like, if we go through this wave and you make a bunch of money and you're an ass to your spouse, or you're an ass to your operations team, or you just quit taking care of yourself, like, really, this is a great opportunity for us to say, there's so much business, there's so many people I can help. This is the moment I don't have to stress about that. And I can just turn my phone off for an hour and go engage and be one-on-one with my kid. I can take myself to the gym because I know that as soon as I plug a back in, there's going to be so much business here, so many people for me to help, that I'm good. So I'm probably not answering your question at all, but I feel a little bit like Donald Trump switching gears and going this way, or some politician. But what resonates me and what's on my mind is this, we do all this personal development stuff, and then we have a hard time like applying it. So at this time, as we're going through this, what I'm talking to my team about is, let's see if we can go through this process, which will probably be the greatest challenge we'll ever have as originators and teams, because I have 147 million people who want a 1% interest rate to refi. And at the same time, my realtors still expect me to close purchases in 17 days. That's an insanely challenging environment. Let's see if we can get through that and be nicer to each other than we were before. Let's see if we can get through that and not degrade our own personal integrity with our workout routines and taking care of ourselves. And let's actually see if we can get through this year and have deeper relationships. So that's like the challenge we have in front of us. And you can either make a little bit more money and be a jerk to everybody, or you can really apply some personal development thinking this year and be a wonderful person, help a tremendous amount of people, and don't be stressed out about it. So no, I'm not up at midnight sending whatever that was. I'm sleeping in, I'm sitting up and doing my meditation, and I'm going to the gym, and I'm taking care of myself, and I'm asking questions to clients. I'm not freaked out, stressed out. We're not moving a million miles. We're just slow and under control.
Well, I was only thinking not midnight, maybe like 8:30 you were up till.
Well, that is midnight for me.
A little past curfew, I know that. Well, but I love that you're framing it that way, because I do think that's the challenge. Everyone's like, oh my gosh, if I don't refinance my clients tonight at 10 o'clock, someone else is going to already have gotten to them. I think that's it, right?
You know, I'm already hearing stories of banks, I won't name names, that are 120 days on refis. So chances are they're going to go somewhere else and have a horrible experience and not get a TCA. And if you did your job right the first time and gave them a good experience in a TCA, they're just going to come back to you and love you next time. So I can let those folks go and I can still sleep well at night.
So let's talk a little bit of scripting for the LO on the call who's like, well, yeah, that's Josh. He can shift gears with his clients and talk strategy and you know how that's going to trump the best rate. But my clients are just hammering me for the best rate. Like, what are some scripts to arm them with in order to shift that gear back over to strategy with their clients?
Yeah, I just encourage everybody to watch the Mortgage Coach videos from Rene Rodriguez, and where he talks about claiming the frame. Just because somebody has a default understanding or perspective on something, you can claim the frame and you can change their perspective. So, you know, it's just as simple as somebody saying, hey, I got 3.25% quote. Can you beat that? And I could just claim the frame by saying, hey, Todd, I've been in this business now for almost 20 years. I've helped over 3,500 clients. And here's the one thing that I've learned. Mortgage strategy always trumps mortgage rate. I can create more wealth and less total cost for you with a better strategy than somebody can with a lower rate. That's kind of funny, isn't it? But let me tell you a little bit more about that. And before I do, I need to ask you a couple of questions because I want to understand your global debt structure. And I want to make sure whatever strategy you decide to go with, whether it's 3.25 somewhere else or a strategy that I show you, I want to make sure that you do two things. You need to minimize your total cost, and you need to maximize your wealth in your real estate. And if you don't accomplish those things, you just save a couple $100, I'm telling you, you're losing. So with that being said, tell me about the debts that you have right now outside of your mortgage. What are the balances and what are the payments? And then let me ask you a few more questions about how many years you're going to be in the house, and then I'll tell you a better mortgage strategy. But just claiming the frame, right? I'm just moving them off of rate over to what are your goals? What are your debts? And then that all leads into building a TCA and showing them how my 3.7 rate's better than your 3.25 because I just knocked out $1,700 worth of debt. And that 3.25 loan is going to take you 30 years to pay off. My 3.75 loan, you're going to be out of in 17 years. Make sense?
Dude, that's huge. I mean, that is just huge. And I think that that's something that we all in this community have to think about. You guys may have not done 3,500 loans over the last 20 years, but you're amazing at your job. You're really good at it. And what we tend to lack is the confidence, I think, Josh, to own the frame. And we tend to lack that confidence, and we tend to just get sucked right into that. Give me the rate, give me the rate, give me the rate.
Yeah, well, that's just my script, right? Because it's honest, it's true. You know, I've advised 3,500 clients. I've done thousands of TCAs. That's my script. But you know, if I'm Denise, the mortgage nerd, who's been on here, she's such a brilliant rock star. You know, maybe her script is hey, you know, what I'm really aware of is that there's an opportunity to make a better financial decision. And what I'm passionate about as the mortgage nerd is making sure clients have the best strategy. And I'm afraid you're getting, a rate somewhere else with no strategy. And I want to make sure that we think all the way through the equation. Whatever your frame is, right? You Denise can frame it that way, but figure out what it is you're passionate about advising people, and bring that up. Claim that frame that with you're going to get a better strategy, lower total cost, and greater wealth in their real estate. And that's 100% true if you are able to chart that out on a total cost analysis and show them the path.
Dude, I think that's just so great. And I think that we all in this community have this in us. I just think that in this community that we just often forget it. We're being caught up in the frenzy. That's what I've been observing of other loan officers. And I said it when we started the call, here you are, right, in this quote unquote best opportunity ever to refinance, everyone and their mother. And you're able to take the time out to be here and be part of the day and be present. And I think it's because you have that confidence and you're okay having that conversation.
Well, it is. And one of the things that we're talking to our team is just help one client at a time. When there's a tsunami of people to help and your energy is spread out all over the place and you're frantic, you're doing a really piss poor job of serving a lot of people. Who wants to be served that way? But if you just, grab one human being at a time and ask them some questions and build them a TCA on it. And I'll tell you what, everybody we locked 2 or 3 weeks ago could already refinance again. I mean, that's the reality. Rates are moving that fast. There's talk about, a 0.5% return on the 10-year, which probably puts the 30-year in the high 2s. I mean, that's realistic. So if we all know that our pipelines are going to have potentially further erosion, we have to just take one client at a time and give them advice. So Todd, let me just end with this. Let's say you're locked and I got you at 3.49, and then you hear on the radio that rates hit 2.875. You're gone if I haven't sold you on a strategy and I haven't moved your focus off of rate and I haven't moved you to the strategy. Here's what I want to tie you to mentally. Josh just figured out how to save me $1,700 a month. I take that $1,700 a month, I put it towards my new mortgage rate at 3.49. I'm going to pay off my mortgage in 16 years instead of the 25 years I had ahead of me. Josh just saved me 9 years on my mortgage. They're married to the strategy, not married to the interest rate, because you actually help them get out of debt and get mortgage free faster at 3.49 than they would have been at 2.875. Does that make sense?
It totally makes sense. And I think that's really the challenge that you guys all have to take to heart, is that Josh is confident in the fact that they're going to find something better being offered to him at some point in the near future. And the fact that he's taken the time and he's anchored that into their head, that his strategy is better, that's going to win him more transactions than he's going to lose, right?
And you can only do that by taking it one client at a time. And you can only do that by asking questions. And you can only do that by slowing down and just saying, I'm going through the process right now of refinancing all my commercial properties. I'm going to pull cash out of a couple of my properties because I'll get bigger loans, and bigger loans in the commercial market gets you lower rates. And then I'm going to pay off a bunch of my lower balance properties. I'm doing the same exact thing for my clients as I am on my own commercial properties. I'm just thinking, how do I leverage the amount of debt that you need into the lowest total cost, free up some cash flow, which now gets you out of debt faster? And so I'm just doing for them the same thing I'm trying to do for myself right now, but it all starts by asking questions. And if we're frantic and we're moving too fast, and it's like, yeah, we can get you 3.49, it's not going to be a great 2020.
Dude, I'm so grateful that you took that time to be here. And I know that you're going to crush this refi season. And so on behalf of the whole community, dude, it was awesome.
Thanks, brother. Appreciate you. Michelle, I'm going to watch the second half of this over the weekend. So crush it. Good luck to you. And thanks, community. Have a great time. Cheers out there.
All right. We'll talk to you soon, sir.
Bye.
All right, guys. So I thought that was awesome. What are your takeaways, Michelle?
I'm still trying to get the 3 things, because he said 3 things and then I kind of lost the 3 things. So
I don't know that he actually gave us.
I got so involved in, everything that he said, I forgot to write down the 3 things. Did you get the 3 things?
Yeah, so let's talk about that in a sec. All right, so real quick, let me introduce you. Let me give you a proper introduction. So I already said it. I've known Michelle now, has it been 2 years?
Yeah.
3 years? Something like that. So Michelle's from Mississippi. You're going to hear it in her voice. And I invited Michelle on. I've actually wanted to have her on for a long time. Now, I realized that Josh was talking really slow. So I'm going to try to do a better job. I'm just trying to coach myself here. I don't know if you all noticed it when Dave and I interviewed Jeremy a couple weeks back, maybe a month ago. Jeremy also is talking a lot slower. And when we did the site visit at Jeremy's office a few weeks back, Jeremy was talking to those of us who were there like this, like Jeremy does, like I talk all the time really fast. And then he would get on the phone and he'd be like, hey, how are you doing today? Right? He was present and he really slowed down. And I think that Josh just did a great example of that as well. However, I wanted to make sure I do a proper introduction of my friend, Michelle Mason. So Michelle is, all right, why don't you just tell them about yourself? You're in Mississippi of all crazy places.
That's not a crazy place. It's a wonderful place.
Well, all right, but it's like a small town America, right?
It is. It is. I live at Oxford, Mississippi, home of University of Mississippi and Ole Miss Rebels. We're about an hour south of Memphis, Tennessee.
All right, and so I just thought here we are. We've got, East Coast, West Coast kind of, right, with Josh and Michelle. And I think, you're different. Josh is doing like doctor loans all over the country, and you're doing like $127,000 loans, or are they slightly bigger than that now?
Yeah, that was back in 2003.
All right, okay.
That's about 225.
All right, 225 now. Well, that's good. And so I think, I see your desk behind you. You got some paperwork on there. So, I mean, what's it like in your world compared to what you heard Josh say?
I think probably I might have a little bit different perspective than Josh. Some of the things that I talk to my clients about, a perfect example of that is the other day I had a guy come in and he wanted to refinance just short term because he was going to sell his house. And as we got to talking about the amount of equity that he had in the property, he thought, I said, well, why are you selling? And he said, well, because my wife really wants a pool. And, it's going to cost about $90,000 to put in the pool. So I said, well, why don't you take the cash out and put in the pool you want, and then you can stay there. And so those are the kind of conversations that I'm starting to see with my clients and asking them, what would make this home perfect for you? Is there something that you could do to it that we could help you with?
No, I think that's great. And that's, again, that's why I wanted you on here, is I know you'll bring a different perspective. And, when you're having those conversations, I know you're a mortgage coach user too. So of course, Dave would kill me if I didn't ask you, how often is a TCA coming into practice for you?
I do them probably about 85% of the time.
And then are you, Josh sets them up certainly different than I think my team is, although I'm going to coach them through that. How are you setting up a TCA, like on that pool transaction? Are you throwing in your current one, the short-term refi he wants, and then your pool proposal?
On the refinance, what I do is I do the current loan, and then I give them two different options plan-wise in terms of a longer payment with, extra cash monthly, or a shorter term to pay off early. And then I always take one of them and I reinvest money. Because one of the things that somebody said to me a long time ago, I've always remembered, is that wealthy people make money using their money. And I think often we don't talk enough about the amount of equity that people have in their homes. And especially in this type of rate market, I work for a small bank. So, we talk all the time about net interest margin. And so I really kind of think that applies to people individually in their real estate. So a lot of times what I'll do is I'll take, if you want to refinance here, this is great. If you want to go ahead and cash out, you can take this other $150,000 and you can invest it and use the spread in your favor. And then you can pay off the loan sooner, and your net worth will end up to be higher. So I guess I take a little bit different perspective than Josh.
Well, I love that. And I think that's good for people to hear, because I think that's oftentimes what I find is when I talk to people and I say, well, my friend Josh says this, and they're like, yeah, Josh is your friend, but I'm not a Josh Mettle, right? And that's always the feedback I get. People want to emulate him, but then they struggle with that piece. And so I think when you're coming in and talking about a different perspective, I think that's hugely valuable. How are you approaching? So I know since you've been in the business for just a couple of years, I won't say how long,
right,
that you've got a lot of past clients. So how are you going out and targeting refinances right now?
You know, up until I really kind of met you, as bad as I hate to admit it, I didn't even have a CRM. So that is something new for me. And so one of the things that we're doing is, you know, we imported all of our clients into the new CRM that we started about a year ago. And, you know, we're just touching points with them. And also I signed up with HomeBot. And probably you have harped on that for probably about 2 years. And I kept, you know, just kind of blowing you off, because that's kind of what I do if I don't want to do something. And so finally I did sign up. And when I signed up, it kind of blew me away. And so that's a huge help for me. So they're getting text messages from me that just remind me I'm here for them no matter what. I try to be the source for everything. So if, you know, they need a plumber, I want them to call me. If they want, you know, anything, I want them to call me first.
I like that. I'm throwing the HomeBot code into the Facebook stream. I'll throw it into Zoom in just a sec.
I was not prepared for that. Because,
exactly. Well, that's okay. I didn't know you were gonna give that plug. And so, of course, people are asking what CRM you're using. I know what it is, but why don't you tell them?
Yeah, it's whiteboard. It's whiteboard.
It's right. So it's got the text.
Thank goodness I have an Andrew behind me over here in the next office, because I have no clue what to do other than just enter basic information. So he sets everything for me, because I just don't have that. I don't have the patience for techie stuff like that.
So are you guys sending out just the pre-canned stuff from Whiteboard, or are you guys creating your own emails and sending them out?
I really tend to do more text messages than emails, because obviously we all know they look at a text message first. So what I'll do is send an email out, and then I'll follow it with a text message that said, hey, did you get my email? You know, I want to make sure that you don't miss an opportunity to refinance. Call me so we can look at it.
I think that's great. And so I just go and automate it out.
Yeah.
So big blast. And what kind of response are you getting to that?
Almost more than we can handle.
So think about that, right? The title of this call was to optimize refinances. And I think that is a challenge. Like oftentimes, you know, I always say go after the low-hanging fruit first. And I think that a lot of times we're like, well, how do I reach these people? So everyone gets out a spreadsheet of their past clients and they go from the highest interest rate and go down. And I often find that those are the folks who've been getting hammered by, you know, Streamline and VA Earl calls and all of that. And so it's an opportunity for you. How do you figure out who is actually most excited to refinance? And I think if you've got a CRM or an inexpensive system that'll shoot out a text like that, I think you can find that. You know, my team did a voice drop to clients with a follow-up that said, hey, did you get my voicemail about saving money? And then the next day it sounded a follow-up that said, hey, did you get my message? And, you know, sure enough, some people responded to the first voicemail, some people responded to the text message, and then some people responded on the third one. But it allowed us to engage in conversation with those that were truly the hottest prospects now. And then now that we're taking care of those folks who probably would have picked up the phone and fallen into some other lender's trap, now they're engaged with our team. And then now our team is able to go back through that spreadsheet and then start looking for the gaps of who we haven't actually connected with. I think that's a good opportunity. Is that kind of like what you're going to be doing, Michelle?
Yes. Yes.
Love it. Love it. All right. So what else are you doing do you think that's kind of maybe slightly different than what Josh is doing when it comes to helping your clients on refis?
You know, Josh is real focused on getting the loan paid off earlier. In my market, I know, you know, he said the mortgage rate is, you know, that the payoff rate is about every 7 years. I find in my market, most people are the same. It's anywhere from 3 to 7 years. And so a lot of times on a refinance, I'll go ahead and stretch that loan back out and give them that extra money a month to apply to something else if they don't have enough equity, you know, to you know, add all their consumer debt in. You know, I free up cash for them to pay to something else because the interest rate is so much cheaper. And, you know, I think sometimes the way our property value is appreciating here, I don't really think it makes a whole lot of difference. And they can take that $200 or $300 a month and put it in a mutual fund, and over the course of the 5 years, still come out better.
And how are you using Mortgage Coach or something else to explain that, or are you just giving that as a conversation piece?
I use Mortgage Coach to talk about it. I do talk a lot about strategy to consumers rather than rates. And, you know, I think it's important that you just connect with people. You have to make them understand that we're doing the best thing that we think for you, and these are your options. But then I also, nobody really kind of ever, I learned this from a video from Jeremy about how, you have to listen. My personality is obviously this is what you should do, and just move on from there.
If people haven't figured it out yet, you just tell your clients what to do.
Yeah. And anyway, I tend to, I'm sorry, my phone is going off. Crap.
That's all right, because people want to refinance with you.
Yeah. So, but what I try to do that I learned from Jeremy is say, what do you want? And let them talk, and then try to lead them and tell them there's no right or wrong. My job is to give you the best options I think that you have available. You have to figure out what works best for you, and I'm just here to help you make that decision and make sure you have all the information.
All right, so pause, everyone. Michelle said, I took that from Jeremy. I asked people what they want, right? Those, the 2 lines I took away from the site visit with Jeremy was, what do you want and how can I help you? And then he pauses. And I think that so many lenders struggle with the pause. Like, we want to fill in that blank space because we feel like if we don't talk and they're thinking that we're not selling, and we have to let them process sometimes. And so when you ask them, what do they want? What are the typical, do the answers surprise you, or what do you typically get back?
I think it's different for everybody. And I think that's what is fun about this industry is that, not everything, every day is something different. Everybody's life has a different scenario in it. And so, some people are cash conscious. How much money do I have a month left over? Some people are, how do I get this property paid off more? Some people are like, well, I'm only going to be here about a year and a half. I just want to save as much money as I can. So, I think each individual situation is different. And so that's the reason that I really learned to pause and listen, because I automatically assume they just want the lower rate, right? Because that's how we're all brought up. But that's not always the case.
Yeah, I love that. Jem Molina in the Facebook said, there's no wrong answer, right? I say that often.
Right, that's right.
Right? Because whatever their answer is what's important to them. And I think that's where, when we're asking better questions, like Josh said, I think that's the key. I thought it was interesting. I'll have to think about it. I'll have to do a little observing around my office today when Josh said that we're all really good in this community about asking our purchase mortgage clients questions, but we fail to do so when it comes to the refinance piece. And I bet that's probably true for a lot of us. So I think that's a good, again, kind of a good reminder from what we heard in that first half. I thought this was interesting too. Tracy, which I can't see your last name in Zoom, said, I'm actually using a refinance fatigue social media strategy. I'm indicating it might not be wise to refinance, and I've had a decent response to it. But most of all, the clients are appreciative that we are not selling hard on refis, and we can accomplish their goals by adding money to principal or invest. And she's in Louisiana, so high five back to the South, and has loan sizes just like Michelle's. You've been great at social media. You went through Steve Sims' course. I know, Steve's a mutual friend, and I've seen you do like wonders on social. Have you done anything social like that for this refi wave, or have you just been so busy that you haven't had time to do something?
I really haven't, because I really I don't want to talk particularly about rate. I did do something the other day where, I fell in the middle of the bank, and did you see my video?
Oh my gosh, that was the funniest video ever. I felt so bad, but I almost was going to repost it and then use it as some.
It was awesome. So, okay. So anybody who doesn't know, I face planted in the middle of the bank. I had taken some mail out, and it was raining, and I had on, I probably need to call Sorel boots, because if it had not been for the Sorel boots that I had on, I probably would have broken my ankle. But, I came in the bank. There was a big wet floor sign there. I completely ignored it, stepped onto the marble, wiped out. And I decided after about a week trying to figure out what to do, because I wanted to use it. Because, I feel like we all want to do business with people that are real, right? If you're too perfect, I don't think there's as much trust there. And so I just went for it and said, okay. So I posted the video of me falling and said, the only thing falling faster than rates is me. So
it was so funny. I love the humility by it. And I love that I saw you post somewhere like, hey, if there was security footage of someone you knew that fell flat on their face, would you use it? And then you turned around and you did it. Because I got to imagine that the bank was like, what? You want that footage?
Yeah, yeah. When I call the IT people, I was laughing so hard because, there's a lot of people out there that have that, you know, what I would consider to be an inappropriate response sometimes to things, right? And I'm one of those people. I mean, somebody falls. I mean, I almost cannot ask if they're okay because I'm laughing so hard. And so I was trying to tell the IT guy to please pull it off the video, the security stuff, and he couldn't understand what I was saying because I was laughing so hard. But he finally got it. And so.
I think that's awesome. I'm trying to see if I can. Maybe I
Oh
can.
my God, are you gonna?
Maybe I can pull it up like if I'm as good as Dave Savage. But let me see if I can make this. I gotta mute it though. That's the problem. Hold on, hang on. Here we go. I'm gonna. Dave is so much more efficient with Zoom than I am. But let's. Here we go. Let's watch it. I'll leave the sound off. But this is Michelle in. You guys see that on the screen? Oh, all right. That's really good, Michelle. I like that. So maybe I wouldn't necessarily recommend that anybody goes out there and tries to imitate Michelle and do that. But it was pretty good to say the only thing falling faster than rates is me. What loads out of that?
I'm sorry, I missed your question on that. What?
Did you get any loans out of your post?
It was really funny. I actually did. I had several people comment and they said, go see Michelle if you want to refinance or whatever, And I mean, I've been in my town longer than anybody else mortgage wise. So I've been here a long time. And so everybody kind of knows me. And I think sometimes I appear to be standoffish, but once you get to know me, I'm not. And so that was my way to let everybody know I was really approachable.
All right. So I love that. So you said you learned from Jeremy the script of, how can I help you? What else in this vast knowledge we have in this community? What have been some of your other recent big takeaways?
I think was it yesterday that they had Bill Hart on, or did I just listen to it yesterday anyway? But about the triage thing, I think that's really important that we get sucked in sometimes, and you really just have to categorize things. I'm very, very fortunate in the fact that the people that I do business with, I have people that I've done loans for 5, 6, 7, 8 times over the course of the last 20 years. And, they just call me and say, I want to refinance or I want to buy this. And I just say, okay. And they trust me to take care of it. And so that's kind of the low hanging fruit for me. So those are the ones that I try to take care of first. And I think that's really important to remember that and not get sucked in on something that's maybe you can't really spend a whole lot of time right now doing, if they need a lot of help.
That video was yesterday. I haven't watched it. You guys all know Bill Hart's been just a huge influence on my life. My first coach for 4 years, still coaches me all the time, gives me bits of advice and bits of encouragement. That's the kind of man and human he is. And Dave is really stoked about that call. So if you haven't watched it, he mentioned it to me this morning when he and I were syncing up that it was great. So in there, you're saying that he's just saying, be careful when he uses the word triage so that I can hear correctly.
Well, there were a couple of things that I remember specifically. One was suck it up, basically, quit complaining and do the work while it's there. And, and which is so true, right? You have to take it when you get it because, it's not always like this. And the second one is, you need to triage and figure out who you can make money off of, you can make money off of next, and you just kind of go through the list and you make about 4 piles. And then that way you're not spending a huge ton of money on somebody that really needs a lot of help to get to the point where you can make them a loan. You get to them, but you don't get to them right away just because, I saw, did you see John Downs' post this morning?
I did not, but I was texting back and forth with John. I love John, so.
Yeah. So he had a post this morning about not to be greedy. If I tell you that you're at, 4 1/4 and I can get you to 3 1/2, don't say to me, well, call me when it gets to 3 1/4, because guess what? I don't have time to call you, right? Don't be greedy. Go ahead and take what you can get, right? And move on. It's about, as well as I do, every time you get greedy, it always goes the other way. And I love it when people say, well, do you think they're going down? or what do you think's going to happen to rates tomorrow, right? And I always just, say, based on what I have today that I can look at, I think there's a very possible that, it will either go up or down based on what's going up, or I think it will be consistent over the course of the next several days unless something happens. But I can tell you, if you lock in 9 times out of 10, it's going to do the opposite the next day. It's just kind of one of those laws that happens, and you have to be able to commit and move on and quit worrying about it.
I think that's so key, right? I always tell people my crystal ball's kind of foggy. And then the funny part is I'd have my headset on and I'd be doing this with my hands every time. My crystal ball is kind of foggy. And I think that's a challenge, right? I think that's a good opportunity to have confidence, right? Is be okay telling somebody that, because in the end, it's hard to catch a falling knife, and it's just more likely that you're going to miss that opportunity, right? And
you're going to get that on the way down.
Yeah, I think that's good advice. What, as far as, other scripts, how are you combating those people who are asking questions about rates, or what happens if rates go lower, or what do you think is going to happen in the future?
I don't really deal with those kind of questions a lot. Every once in a while I'll have one, and, I kind of, I always default to the, I don't know, I've been doing this a long time. I've seen lots of things, and, today is the day. If you want to do something, you do it today, because I can't tell you where it's going to be. I can tell you based on what all these other people say, but 9 times out of 10, they're not always 100% correct either.
Yeah, I think it's really critical. And I would encourage all of you. I think one of the things I found in talking to, the members of the community who you guys all love to watch is that they're confident to tell their clients just what Michelle said. Today's the day. Let's lock it up. And what I'm finding is that a lot of loan officers are using the strategy of, well, I'm watching the market, and if it gets better, I'm going to call you. And if it gets worse, I'm going to lock you. And think about that. You're actually causing a lot more work for yourself. Number one is that you're adding stress to you. You're actually adding stress to your client, because you weren't strong enough. You weren't, you didn't feel confident enough to say, yes, this is your day. Yeah, there may be some risk that rates go lower, but let's just lock it so you can get it off your plate and we can move on. And then you're having to actually set up, instead of calling that next person for a refi tomorrow, you're actually having to call the person and give them an update and resell them on rates and whether they should lock or not lock. And so I'm seeing a lot of that in the community, where people are really not feeling comfortable just saying, yep, let's lock it in, because you're more worried about the fact that tomorrow they're going to be 1/8 of a percent less, and that one of those 2 or 3 other people are going to harass them. And so go back what Josh said. Josh is confident that he's connected with them enough, that he's separated out himself from them with strategy. And yeah, you know what? I know some of you are thinking, well, they'll just steal Josh's strategy and they'll just go use it somewhere else. And you know what? They may. But Josh is going to sleep better at night. He's already going to have taken the time where the other loan officers are chasing those other people, trying to get them down, trying to steal them away from the other lender, and not focusing on the new lenders. And so be thinking about that. My brother-in-law, I've been training him now for about a year. And he's like, hey, this person streamlined 3 months ago. Should I refinance them? Well, you know what? You can always decide that, right? That's an early payoff for somebody else. And I said, no, just tell them, you know what? Let's wait and see how rates are in a few months once your loan's in place. That was a good loan then, and let's reconnect. So I had to be a good citizen, not cause an EPO for the other loan officer. And then we'll still get the opportunity to refinance that client if rates get better. But be thinking about how you're showing up in there. Josh said, don't be a jerk. I think that's really important, that we're good citizens as well. And then think about it. If the other person's got 3 other quotes and they're putting everyone against each other every day, is that your best person to continue to chase after? Or could you turn around, number one, and try to say, you know what, I think I've been approaching this wrong, right? I think actually what I needed to do was give you a better strategy and not focus on interest rates, and re-engage in the conversation and see if you can win them on that, right? Go back to the beginning, listen to the first, 20 minutes with Josh. Or I would say just move on, right? Let them go, and then go focus on somebody else, and then restart a different direction so that you don't have that challenge. Those are probably my big takeaways from that. In kind of hearing you, Michelle, what do you think?
I had an interesting situation the other day that, when Josh was saying, don't be a jerk. And I had a client call me and say, he had called me, several times, checking rates, whatever. I could tell he always banks with everybody else. He does everything with everybody else. I mean, he was just a rate caller. But he called me and he said, what are your rates? And I told him, and he said, okay, well, can I come and talk to you in the morning? And he did. He brought in his CD. He was in his 3-day right to rescind. And he
Wow.
wanted to switch. Okay. And I had that conversation with him and I said, did you talk to them, your other lender? And he said, no. And I said, well, I can tell you that if you were my client, I would want you to talk to me. I would want you to say, you know, look, I understand rates have fallen and, you know, what can you do to help me? Or can you, you know, have a conversation with them at least, you know, and I tried to get him to go back and do that. And he said, well, my experience is not as good. So, and he rescinded the loan and restarted with me, which was kind of crazy. But I think, you know, when you really pay attention and do the right thing all the time or try to, that it really, you know, what you get back from that is way more than what you get trying to hustle.
Well, I think that's the key. I do think that, you know, it is really hard, right? I mean, it's, you know, my team's on fire. You know, my wife is the quarterback of the operations side of the team. You know, she was at the office till 9 o'clock last night, and it has a drag on you. One of the things that I've taken away from Josh and John Downs, who you mentioned really early on, is they've really influenced me to be healthier. And, you know, it's interesting, we're nerdy. You'll notice Dave Savage has one of these now too. We all wear these health rings called Aura that have track your heart rate and your sleep. And my wife is funny. She's been at the office till 9 every day this week. We shipped Win by Noon last weekend. She was here standing on her feet doing that. And her resting heart rate every night has been a lot higher because of it. So also keep in mind what Josh said about trying to be healthier, right? Don't skip your morning routines, right? There's still going to be another loan there. And you're just so much better if you are treating your body right. You're going to treat those around you right. And I love the fact that you took that client who that was an easy loan for you to steal, and you encouraged them, hey, no, don't let me steal it. Go back. You told them what you would want him to do if it was your client. So that's what great advice.
Thank you. Thank you.
All right. So I think we got some great strategies here to optimize what we've got going with refinances right now. I think this is one of those calls where you go back and you listen to. We got really great perspectives. We had Josh, obviously all-time, you know, heavy hitter from our community, come in and really talk about what he's doing and how he's consulting with clients today, right? Then we had Dave sneak in there in the middle and pull out of Josh his mortgage coach strategies and how he's using mortgage coach to be even more targeted to highlight the strategies that he's doing. And then we had Michelle, who kind of came in, she was the cherry on the top and really helped us with, hey, here's a different perspective from a different part of the country in a different market with how to get things done. And so I think we should probably just kind of leave off, Michelle. What are your last kind of thoughts that you have that you would want someone who's listening to this call to maybe do when they get off this phone, or get off this video?
This video. You know, I don't have a good answer. That was one of those questions you should have asked me ahead of time.
Well, no, I never want you to be prepared. Like if I prepare someone for it. So, all right. So how about this? What are you going to do when you get off this call?
I'm going to lunch because it's 12 o'clock here.
All right. So when you get back from lunch, are you going to do anything different than what you would have thought you were going to do this morning?
Yes, I have a list of 6 people that I need to call this afternoon. Just kind of check in and see how things are going. I think one of the things.
Are you going to try Josh's script?
Oh, I got to go back and listen to that. Yeah, my favorite thing that he said, I keep going back to it, is, I can't wait to say, super intentional. Be super intentional. I'm gonna tell all my people to be super intentional, and then strategy always trumps rate.
I think that's good. It's funny. It's almost makes me tempted to pick up the phone and make a few calls alongside of my team and try out the scripts, because I think that's really what it is, right? When it's a script, it's, you know, that's a great script, but you may not think it's great for you, right? So I say you memorize it, just like Michelle, just doing it right, reading it there, write it down. You're on the phone, they can't see you. And then you can customize it to you. You may be like, well, you know, strategy beats rate all the time, right? You may not like the exact words, and then that's what you internalize to say it over and over again.
Trumps is way better. Trumps is way better.
Well, like boom, you know, that's it. But I can just tell you, whoops, hit my desk, shaking. But what I know from Josh is he says the same thing about the same way every time. He is super intentional, to steal that. He is super intentional with what he says, and he really thinks through it. And I think the other part is that I'm going to slow down the rest of the day. I really think that
I'm already there, though. I already talk slow.
Well, you got that twang that I just can't. I'm not going to try that. That wouldn't be good. But I do figure out when I talk to you a lot, I say y'all a lot more. So that just is how it is. And so I'm super grateful, Michelle, that you took the time. I know you got a lot going on to be here. Certainly grateful that Josh was here and that Dave was able to poke his head in for a minute. And of course, to all of you who were here with us today. So I think this was a great call. I think you got to rewind it, listen for those gems that were in there on things that you can implement into your business. On behalf of Dave Savage and the entire team at Mortgage Coach and myself and the Win by Noon team, thanks for being here. This call's a wrap.